yesterday Hero Motorcop came out with the results and they were weak as per expectations. The gross margins grew at a great extent, close to about 30.7% from 29.6% YOY and 29% on a QOQ basis. And this is because there was some sort of softening of raw materials, costs observed in Q4. And going forward, we believe that the cost will slightly spike up in Q1 and Q2, but going after that, there will be some sort of deceleration in that. EBITDA margins were close to at 11.2%, and that were down by about 270 bips on a YY basis and 100 bips on a QOQ basis. And the reason for that is higher CSR activities, which amounted to about 80 to 100 bips in Q4. So on and on, the PAT degrew by about 29%, and that was because of the operational underperformance. But going forward, we believe that April numbers were quite good. 12% growth was observed on the YY basis, and that was partially because of the marriage season that is observed in this particular quarter, that is April, May and June, and till mid of July in the northern parts of the country. And that is going to provide a good fillip to Hero Motorcop, because Hero has got a very strong presence over there, especially in the rural markets, and the rural contribution is growing at a good extent. Last year we saw that rural markets were underperforming because of the extensive COVID wave penetration. But now there is a sort of very good recovery over there. So going forward, we believe that rural markets are expected to do well. Also, if you see on the margins front, I think that there is a good expansion expected because we believe that there will be price hikes taken. There was a price hike of about 1,000 rupees taken in the month of April, and going forward also there will be good price hikes taken. Product mix is improving. As well as the LEAP program of the company, which saved about 300 bips in Q4, are expected to save even more going forward. So margins are expected to move up from here, at least 100 bips every year in FY23 and 24. Volume expectations are good because all the underlying parameters are in place, like the rural demand, as I said earlier. The GST collection is quite strong. The penetration of the two-wheeler market is still very low, 1/3 of what it is observed in South Asian countries and Southeast Asian countries, I would say rather. And overall demand with new launches coming up, the scooter penetration going up, markets opening up, and things slowly coming back to normalcy. I would say that about 100% normalcy is observed at this point in time. Also, there is no chip shortage pressure on Hero Motorcop, because that issue is there in the higher segment or the premium segment, where Hero is having just about 5% market share. So there is no worry on that front as well. Therefore, considering these factors, we have given a buy rating on the stock with a target close to 2826. So I think that within the auto space, Hero and Bajaj Auto, these two stocks we like, and definitely one can amass them at lower levels. Thank you.